Welcome back, guys, and welcome to those of you who are new to the Freedom Income YouTube channel. So in this video I am just going to show you how to trade options, how to trade options via interactive brokers, to be specific. So options, there's those of you who are here, I'd assume you know what options are, and so basically there are many platforms that you can trade options via. I know that TD Ameritrade, Thinkorswim platform is really good. However, if you're based in the UK, United Kingdom, like myself, you cannot use TD Ameritrade. If you're based in America, that's actually a really good platform. But I think the Interactive Brokers platform for trading options is really good as well. Professional, trustworthy. So you could go with either or, just to kick off. So just a little bit about options. So I've actually been trading options for about 2 years myself. I've been trading my whole career or journey in trading has been about 5 to 6 years, 5 years, trading in stocks and cryptos mostly during that time. And if I'm being honest, options, especially during the most recent year, I've been trading it for the last 2 years, but this most recent year, I have found that options is the one that, if you want consistent profits or consistent income from trading, no matter what market condition, options is the one that you want to be trading. Not stocks, not day trading, not forex, and not cryptos. Right, and not, at least not on a day-to-day basis. I think these kind of instruments you can. These kind of instruments, I think, if you trade occasionally, once every 4 years or so, when after a crash or during a Bitcoin halving year, they can be good. They can be really good, because your risk is low and your probability of profit is actually really high during the right time. But it doesn't mean that's all the time. I mean, if you just I'm going to show you exactly how to buy or sell call and put options in a second. But if you just go over to any chart, and if you just if I just move my face a little bit here, if you just look at cryptos, right, and you just look at Bitcoin, okay, let's just even see the weekly, or let's see the daily. In fact, let's take the Bollinger Bands away. So this is TradingView, for those of you who might not know, but it's a very popular platform, and I would recommend it for your technical analysis. It's really good. I've been using it for, I'm used to it. I've been using it for 5 to 6 years, so since the beginning. So this is the sort of chart we're talking about in terms of Bitcoin, right? And if we go over to our CFDs and if we go over to our US 500, it's recovered a bit, but recently it's quite a lot of dip, right? So during these kind of market conditions, one might say you can short the market, but you try and short the market, and if it goes up like against you, you see what happens to your money. And it's quite difficult to anticipate the market a lot of the time. Just by guessing, these kind of day trading sort of games that a lot of these people, or alerts that people give, if you don't know what you're doing, you're going to lose your money. Every 4 years on average, if you trade into stocks and cryptos, you're going to make a lot of money, especially cryptos, a lot of money with high probability and low risk. So that's one of my sort of main strategies. However, I have, because that sort of takes that takes a long time before you can make that big amount of money. Although it's still worth it because you can make such a big amount in that year. But during the other years, or during normal times, that's why I've been studying, I've been learning a lot of this, and I have developed options trading strategy that you can actually make consistent income, or profits. Income is profits anyway in this case, and profits and income from it consistently, no matter what, despite the market conditions. So anyway, I just want to show you how to do this is a demo account, so I just that you can set your demo account to any amount of money you want. This is one of the demo accounts that I haven't used for a while. You can change the number. You can even change the numbers to 5 million if you wanted to. It's just a demo account. You can start with whatever you want. So first of all, let's say you wanted to trade like Apple, just as an example, right? Apple. But you want to trade the options, right? Not the shares. So it does take up a second. There we go. Apple Inc. AAPL, Apple Inc. Right? So this is the Apple. What you do, you search here, you get the Apple here. Once it's up there, you go to new window here, right? And then you go to option chain. You click on option chain, and what that does is that it brings up the chain of options for Apple up. Okay, so this is the other thing, right? This is actually pre-market. With interactive brokers, however, you can only trade options during market opening hours. You can't trade it any other time otherwise. So yeah. So here, these are the dates. So basically, if you these option contracts expire in 3 days. These options contracts expire in 10 days. And these options contract expire in 17 days, and so on. Okay, and these are your call options on this side, and these are your put options on that side. Now, a call option is basically, if you buy a call option, you want the price of the underlying instrument to rise. If you sell a call option, you want the underlying instrument price to drop. If you buy a put option is the other way around. If you buy a put option, you want the price to drop. If you sell a put option, you want the price to rise. So now this is so let's say you wanted to buy a call option, right? What you do, you go to call, and then you click on this bit here, right? You click on the ask price, and basically what you're saying here, but you've got to choose your strike price, right? So these are strike prices, right? So what you want to do is you want to look at the current price for Apple. So let's just have a look over here on TradingView. So the current price is 144.22, 144.22, and then you bring it over to here to your options chain, 144.22. So you want, if you anticipate that Apple's price is going to rise, you then want to choose the strike price and for the price to rise. And as the price rises, especially if you choose a higher strike price, then it rises even more. But that's only if you anticipate the price to go up. If you anticipate the price of the underlying asset to drop, then you sell. Then you want to sell a call option, right? And then you can do the puts. I'll show you the puts. So if you wanted to buy a call option, anyway, what you do, you click on the ask price at the strike price that you want, and then you go back over to here, which is your platform, and then it's here, and this is on buy. So basically, you're buying options at the 142 strike price for a call option, right? And remember, one contract usually controls 100 underlying shares. So if you're buying one call option here, you are actually, you're actually holding a contract which controls 100 shares of Apple. Okay. Now you can then do a limit price, or you can do a market price. Usually limit price is better because you can get filled a little bit cheaper. You save a little bit of money because market price kind of gets you filled faster, but you might lose a little bit at the beginning. So I usually go for limit price during the market open, and I go for a price that I tend to want. And I usually turn this to GTC instead of day. So I turn it to GTC. So if you just want one contract, that's one contract. You can have 10 contracts, whatever you want. And then what happens is during market open hours, if you press submit, right, you must enter a limit. Right, you must obviously enter a limit price. In this case, I'm not entering anything because it's not market open, and the prices are not showing yet. It will be all this bid and ask prices here will show the prices during market open, and then you can put a limit price in, or you can put a market order in, and then it will just fill it. Once you submit and then press confirm, there's like a window that pops up. You confirm, then you will get that call option. So that is how you would execute an options trade, a call options trade, right? A buy call options trade. But let's say you anticipate the price of the call option to drop. What you then do is you let's say that this price is if this is the same strike price you want, then you go to sell. So this is when you anticipate the price of the stock to drop. And with a call option, what happens is that if the price rises, the call option will rise more, and if the price drops, the call option will drop more. So that's how it works. So if you wanted to sell a call option, then you do the same, exactly what I've just covered, and do that. Okay. Now that typically a gambler or someone retail traders anyway, or a gambler or retail traders tend to do that, tend to buy and sell call options. That's what they tend to do, because You know, I mean, although a lot of call options, I mean, a lot of call options are super cheap. I mean, if you look at some of the penny stocks, a call option is super cheap, and you're only risking a small amount in order to perhaps win a lot. And I understand the concept, and I think it's definitely worth doing during the right market conditions, right? Let's say the market's crashed so much, and then it's during a very bullish year that everything's recovering. I think if you buy call options then with a good enough run date, I think is very good. It's a great way to make money because you can make a hell of a lot more than you can do with stocks. However, during normal market, during ordinary times, which is like most of the time, it's very difficult to guess or anticipate which way the money is going. And what happens is that time decay is going to kill that call option, and you can lose the whole amount, fairly quickly during the wrong market conditions if the underlying instrument moves against you. So what I like to do and what I found to be highly consistent is actually to do put options, to trade put options. And there's a few ways to do it, and my favorite way is actually to sell put options. The only disadvantage with that, or with these kind of strategies, is that you do need a certain amount of capital in order to do this right, in order to make a decent amount of money. I would say $5,000 minimum or more for you to make a decent amount of money with it. Because if you actually have less than $5,000, like let's say just a few $100s, and you do this, you couldn't really do it because in order to sell put options, you need basically to have enough capital in case you get assigned the shares, underlying shares, which means you need quite a lot of capital. So if you have less than $5,000, unfortunately, this is going to be a slow grind and might not work. But if you have $5,000 or more and you can invest into this, literally with put options, especially when you sell put options and you know what you're doing with selling put options and you know how the market works, you receive an income right away. So, for example, let's say I wanted to sell a put option, right? Let's say if I wanted to sell a put option at this price, right, at this strike price for Apple, okay? So what happens is that when you sell a put option, remember you want the price of the underlying instrument to rise, to go up, okay? But as soon as you sell it, you're going to receive an income right away coming into your bank account, coming into your broker account, and that income stays there. And really, let's say you do the 144 put, right? As long as the price of that instrument by expiry remains below that strike price you've chosen, you keep all that premium income which you've collected at the start of the sale. Which is why I really like this strategy, because the profit, although you don't make as much as say buying a call option when the stock moves with you, which again I stress there are times that you do that and it's fantastic, but those kind of times are not like it's not like the market isn't always bullish, isn't always like bloody rising crazy style. So during the normal times, although you might not make as much selling put options, depending on how much capital you have, because you're really relying on that premium income that you collect. However, the probability of it happening is very high, which is why this is a strategy that banks, institutions, and funds use, right? The banks, the institutions, this is how even Warren Buffett sells put options, because the worst scenario that can happen is that you get assigned good shares at a good price anyhow, but that wouldn't happen if you know how to rectify that. There's something called hedging which you can do, then balances things out, and there's something called rolling the contract which you can use in order to fix your trade if it goes against you. I have found I can manage a 95% win rate over the last 6 months, right? Especially this year, I've been doing this a lot. Over the last 6 months, my success rate with options has been 95%, and I've always been able to keep that income, which is fantastic. So I'm actually thinking about starting an alert service next year. I think January 2023 is when I'll start, where I'm going to provide alerts for options trading, alerts for any pumping stock trades, alerts for even matched betting, football trades and racing trades, which I think are going to be huge winners. So I'm going to start that in January. So those of you who are interested, let me know. Join the Discord group, which is completely free. And let me know, and I'll probably start something in January, highly likely start it, and there'll be a lot of value in it. Anyway, happy trading, guys.